So we'll be walking you step by step through CRRSA and ARPA rent relief plans so that they have a full understanding of what the FAA expects to see in each column and each field of the tool we've provided to facilitate reimbursement and drawdowns on the grant. We do take the input we get from these webinars along with other places we get information to update our FAQs. We've done so most recently at the end of November. Please refer to them and keep an eye on them for potential more updates. We're hoping we're getting to the end of this so that we won't be needing to do many more updates, but that's a great and your primary source of information about CRRSA and ARPA concessions rent relief and CRRSA and ARPA generally. Well, welcome again and thank you. I'll turn the presentation over to Julianne Dwyer. She's our manager of the Airport's Financial Policy and Special Programs branch and has been heralding and shepherding, if you can herald and shepherd at the same time, the COVID relief programs for over a year now. So Julianne, I'll hand it off to you and you can introduce your team. Thanks.
Thank you, Dave. Hello, everyone. It is a pleasure to be here today. As Dave mentioned, my name is Julianne Dwyer. I'm the manager of the Airport's Financial Policy and Special Programs branch. The COVID relief programs, CARES, CRRSA, and ARPA are a few of the programs that are underneath my purview. I manage the staff and the operations of the COVID relief programs. The CRRSA and ARPA Act are unique from the CARES Act. Congress wanted to ensure that these funds are available to provide much needed economic relief due to the COVID-19 pandemic. More specifically, the concessions funds provide rent and minimal annual guarantee relief for concessions at airports. It is you, the airport sponsor, that is key to providing this much needed relief to concessions. Throughout this presentation, airport sponsors are welcome to send their questions in through the Q&A feature, and I believe for most everybody, it should be at the very bottom of your page. The panel will do their best to address each question submitted at the end of the webinar. Without further ado, let me introduce three subject matter experts that work tirelessly on the COVID relief program. The first is Elizabeth Smeda. The second is Emma Carpenter. And the third is Dolores Briggs. And without further ado, take it away, Elizabeth.
Okay, thanks, Julianne. So during this webinar, as Dave mentioned, we're going to talk about the concessions rent relief plan requirements for both the Coronavirus Response and Relief Supplemental Appropriations Act, which we refer to as CRRSA, and the American Rescue Plan Act of 2021, which we refer to as ARPA. There are some similarities between the two plans. However, we will go through each plan separately, step by step. The first part of the presentation will focus on the CRRSA rent relief plan, and the second part will focus on the ARPA plan. And along the way, we will point out very distinct differences between the two plans. Finally, we'll close with a discussion of the lessons learned based on the plans that we have received to date. And then we'll go through the questions that we received prior to this webinar via email. And hopefully, if we have time, we will get to the questions you have in the Q&A box. All right, so this first slide provides the link of our website where CRRSA information is located. This includes frequently asked questions, which we updated this past November, a sample CRRSA concessions rent relief plan, a sample CRRSA concessions certification form, and a sample closeout report, which is required when you submit your plan in Delphi for reimbursement. So let's start our discussion with a focus on the CRRSA plan and the requirements needed as you work through your plan. The concessions rent relief under CRRSA is rent for periods of occupancy and on commercial use or commercial use after December 27, 2020. Sponsors may use these funds to provide relief from rent and minimum annual guarantees, commonly known as MAG, to on-airport car rentals, on-airport parking, and in-terminal airport concessions. For CRRSA, airport sponsors may retain up to 2% of its allocation for administering the relief. This is unique to the CRRSA program only, as the American Rescue Plan Act does not allow for that 2% administrative allowance. There are two consultation requirements we ask for under CRRSA. We ask that you meet with your airport concession disadvantaged business enterprises, or ACDBEs, on a one-on-one basis to explain your plan and how you intend to provide relief to them. And for the remainder of your concessions, you can consult with them in a more general way, such as holding a meeting that includes all of them. So what should be included in your CRRSA rent relief plan? These 10 elements on the slide are outlined in our frequently asked questions, CR 15 to be specific, so you can reference them later. Be sure to include both concessions, trade names, and legal names, a yes or no whether a concession is eligible for relief, who your ACDBs are, the dates you meet with them, and that concessions community is a group, the baseline time period you decided to use, and any considerations you made while determining relief proportionally. Certification dates, PPP loan information, please include clear notes on whether the concession applied their loan toward rent specifically at your airport, and any notes that you have on special circumstances. Okay, allow me to turn the presentation over now to Emma. Emma Carpenter will go into more detail on each item as she walks through the sample plan step by step.
Good afternoon, everyone. So now let's take a look at the CRRSA Concessions Rent Relief Plan, which, as mentioned in previous slides, can be found on the CRRSA webpage. We understand the snapshot views may be difficult to read, but note that they are only intended to provide an overview of the form and to facilitate that discussion. Detailed information for each section of the form will be discussed in separate slides. So this slide gives you an overview of what the sample plan looks like and the different elements. So as you can see, you are required to include specific information about your concessions, rent for the baseline time period, and calculations of the rent relief. The purpose of the information collected under this plan is to understand your concessions program, its specific information about your concessions community, rent information, proportional share of rent relief provided under the CRRSA grant, as well as other elements that we are required to verify. You are not required to use a sample plan, but please ensure that the plan that you are submitting includes all of the information required on the sample plan. In the following slides, we will discuss section by section the CRRSA Concessions Rent Relief Plan and provide detailed information for each section and offer clarification of the information we are requesting. So the first section of the plan that we're going to discuss is the top portion of the plan, which is the section on your screen that is included within the red box. The first part of the plan is general basic information, including the airport's name. Note that it is very important that you include your airport's name, since we will use that to match the grant amount which was allocated for each airport. Each airport sponsor receiving airport coronavirus response grant program allocations for concession relief must use such funds to forgive rent from concessions at the airport. This section of the plan requests that you identify your baseline time period as well. The baseline time period should be relevant to the expected duration of relief to be provided, but in no case should the baseline time period be after the first quarter of 2020. In the notes on special circumstances section, you will want to include circumstances that in general apply to all of your concessions. We are requesting that you use this section to state whether or not the airport required anything from the concessions in exchange for rent relief under this grant. An example of this would be that sponsors may require certifications that each eligible concession continues operating or remains ready, able, and available to operate at the airport. Sponsors may include phased reopening schedules and expect cooperation with regard to varying levels of service during periods of changing demand. That type of information should be clearly stated in your section. The second section of the plan that we will discuss is the concession's legal names and concessionaire's trade names or doing business as names. So this is a section here highlighted in red. In this section, you should identify the concession's legal names and concession's trade names or doing business as names. You want to make sure that the legal name you're entering here matches the legal name with whom you entered into a contract with. This is typically identified as the contract by and between sponsor and XYZ LLC, for example. It's very important that you disclose the legal name, as we're using this information to cross-check the PPP loan information against records maintained by the Small Business Administration. Now we are moving on to the section that focuses on your rent relief calculations. We will discuss rent income during the baseline time period and the percentage of the proportional rent calculations. These sections of the plan are identified again within the red box on your screen. This section requires that you disclose the rent income in the baseline time period that you identified. CRRSA requires rent relief provided to be proportional among each group of eligible concessions. The second column will show the proportional percentage share based on the baseline rent income. And lastly, the rent income provided column shows the proportional share dollar amount allocated for each concession. As noted in the concession's rent relief plan explanatory notes, the rent relief provided must be for occupancy after December 27, 2020. It is important to note that the FAA defines rent loosely to include any form of income received by the airport from the concessions, to include any fees, percentages, and so on. Now we will turn our attention to the Airport Concession Disadvantaged Business Enterprise Requirements. This is also known as ACDBE requirements. As you know, CRRSA requires the airport sponsors prioritize relief from rent and MAG to minority-owned businesses to the extent permissible. This section focuses on verification of that requirement. Prioritization to ACDBEs should include timely, individual consultation with each ACDBE and reasonable consideration with regard to timing or structure of prorated relief. In the next column, you should identify if a concession is owned by an ACDBE at 100% or through the partnership in a joint venture. In the case of a joint venture with an ACDBE, we request that the airport sponsor provide the percentage ownership by the ACDBE partner. That information can be entered in this column or in the comments section for that concession. You're also required to provide the date that you held the one-on-one consultation with the ACDBE concession. This includes those partners in joint ventures, regardless of their percentage ownership. If you identify a concession as an ACDBE, there must be a date in this column. Please note that the one-on-one consultation requirement is for the ACDE concession only. For the remaining concessions, you can meet with them as a group. The next slide focuses on the last 5 columns in the sample plan. We will discuss in detail the concession certification, which certifies to the FAA that the concession has not received a second draw of a covered loan under the Small Business Act that was applied towards rent at your airport. As you know, an airport sponsor should collect concession certification where an airport concession certifies that it has not received a second draw or assistance covered under Section 7 of the Small Business Act. A sample airport concession certification is available on our website. The airport sponsor should retain the signed certifications as supporting documentation and report the dates of these certifications in the section of the rent relief plan. We also want to stress that we don't actually need the copies of these forms. All we need is the date it was signed. Also, there should be a date entry in your plan for each concession to whom you are allocating rent relief to. The next 2 columns deal with PPP loan second draw information. Concessions are required to disclose whether or not they received a second draw or assistance for a covered loan under the Small Business Act and applied it towards rent or MAG at your airport. As mentioned earlier, we are cross-checking loan information to identify any mismatches, so it's very important that this section is completed. Please make sure that you enter yes or no for each concession. It is very important to include the PPP loan information and the date the concession's certifications were signed. We cannot approve your plan without this information. The next column requests that you verify that each concession is eligible for rent relief. A yes or no response is required for every entry. It is understood that a no entry means that no rent relief should be allocated in the plan. And finally, the last column is for comments or notes on any special circumstances, provisions, etc. If you made an adjustment in the rent relief allocation because the concession is no longer an ongoing concern, or if the current operating concession replaced a concession operating during the baseline time period, sponsors should make a short comment relevant to the adjustments. Please use each row to provide any comment on special circumstances specific to that concession. With that said, this concludes the overview of the Krissa Concessions Rent Relief Plan. I will now turn it back over to Elizabeth, and she will introduce the American Rescue Plan Act of 2021, also known as ARPA.
Okay, thank you, Emma. All right, now we're about halfway through. We're going to focus now on the ARPA plan. The link on this slide directs you to FAA's ARPA program resources, and similar to Krissa, we have frequently asked questions that are specific to ARPA. Those were also updated in November. We have a sample ARPA Concessions Rent Relief Plan, a sample ARPA Concessions Certification Form, and a sample closeout report for ARPA concession grants, which you will need when you submit your grant in Delphi for reimbursement, or your plan, I should say. The concessions relief under ARPA is for rent for periods of occupancy and or commercial use after March 11, 2021. And as mentioned earlier, administrative expenses are not provided to sponsor under ARPA, just Krissa. Eligibility for ARPA rent relief is limited to in-terminal concessions only. This is more restrictive than the concessions that are eligible under the CRRSA Act. A concession is considered an in-terminal airport concession if it is a business that is physically located in the airport terminal building and engaged in a sale of consumer goods or services to the traveling public under an agreement with the airport sponsor, other concessionaires, or the owner or lessee of a terminal. Please note that who is considered a concession for ARPA relief is different from who is considered a concession for CRRSA relief. ARPA does not provide rent relief for on-airport car rentals and on-airport parking concessions, as CRRSA does. Accordingly, these types of concessions are not eligible to share in this relief. However, these concessions fall under the definition of in-terminal concession through either a physical operation in the terminal building or advertising in the terminal building. An airport sponsor may allocate a portion of the concession's total rent that reflects the in-terminal presence only. So you use the guidance in the FAQs. It is up to each airport to define what it considers an in-terminal concession. Make sure that you clearly note in your plan that the rent relief is for the in-terminal physical presence only. Under ARPA, the relief is separated into two amounts: an allocation for small airport concessions and a second allocation for large airport concessions. An airport sponsor must account for proportionality on 100% of each grant allocation to administer the relief to eligible small airport concessions and eligible large airport concessions, respectively. So under ARPA, an eligible large airport concession is a concession that is in terminal and has gross receipts averaged over the previous 3 fiscal years of more than $56,420,000. A concession that operates locations at several airports should use the entity's total gross receipts across all of its locations. Now, an eligible small airport concession is a concession that is in terminal and either a small business with gross receipts averaged over the previous 3 fiscal years of less than $56,420,000 or a joint venture. A concession that operates locations at several airports should use the entity's total gross receipts rather than the gross receipts for an individual location. And joint ventures with one or more Acdbe partners should be classified as a small airport concession regardless of the gross receipts totals. For your ARPA plan, you need to identify the concession's contractual relationship with the airport sponsor. For example, is it a direct contract, a concession developer, a prime contract, or a subcontract. An airport sponsor should categorize airport concessions based on the contractual relationship that is in place as of March 11, 2021. Please do not consider a later date than March 11, 2021. As mentioned earlier, an in-terminal concession is a business that is physically located in the airport terminal building and engaged in the sale of consumer goods or services to the traveling public. And note that this means that only master or prime concessionaires, developers, or lessees who operate a concession at the airport are eligible for rent relief. If the master or prime concessionaire, developer, or lessee, which we consider as a first-tier entity, does not operate a concession at the airport, only the subcontracted or sub-lessee concessions, what we consider the second-tier entities, are eligible for the rent relief. So please note the contractual relationship in your plan. Okay, so what should you include in your ARPA concessions rent relief plan? As shown here, you are required to include 11 components of your plan. The frequently asked questions for ARPA, specifically question number CR16, outlines the information that you are required to include in your plan. Please refer to the FAQs and your sample relief plan to ensure you are including all components. And you will notice that these requirements are very similar to those in your CRRSA plan. So I will not repeat all of them here. Please note, however, that number 4 on the slide is a new requirement for ARPA. And also note that in number 5, we are not asking you to meet one-on-one with your ACDBEs as required for Krissa. You are only required to meet with the community of your concessions as a whole. Now allow me to turn the presentation over to Dolores, who will walk you through the sample ARPA plan section by section.
Thank you, Elizabeth. So we will now look at ARPA Concessions Rent Relief Sample Plan, which, as mentioned previously, can be found on the ARPA webpage. As it was mentioned earlier, we understand that snapshot views may be difficult to read, but please note that they are only intended to provide an overview of the form and to facilitate that discussion. Detailed information for each section of the form will be discussed in separate slides. This gives you an overview of what the sample plan looks like and the different elements. As you can see, you are required to include specific information about your concessions program, rent for the baseline period, and calculations of the rent relief. The purpose of the information collected under this plan is to understand your concessions program, specific information about all of your concessions community, the contractual relationships, rent structure, proportional share of rent relief provided under the ARPA grant, as well as other elements that we are required to verify. Although you are not required to use the sample plan, we strongly recommend that you ensure that the plan that you are submitting includes all of the information. In the following slides, we will discuss section by section of the ARPA Concessions Rent Relief Plan and provide detailed information for each section and offer clarification of the information that we are requesting. So the first section of the plan, we will discuss the top portion of your plan, that section on your screen that shows in the red box. This first part of the plan is general information, including the airport's name. Similar to Krissa, it is important to identify the airport's name since we will match it to the grant amount which was allocated for that airport. The Airport Rescue Grant allocations for concessions relief are specific for each primary airport and must be used by the airport sponsors in a manner consistent with the conditions requirements of ARPA. In this section, we are verifying that you consulted with your concession stakeholders on your rent relief program. Airport sponsors should consult with its concession community generally to gather suggestions and preview its plan. We recommend that you discuss how the rent relief is being calculated and whether or not they should expect a credit in their account. In this section, we are also looking for you to clearly identify your baseline period. An airport sponsor should choose an appropriate baseline period to calculate the proportional share. The baseline time period should be relevant to the expected duration of the relief to be provided and reflect a normal operating environment. Examples of baseline period are calendar year 2019, first quarter of 2020, or February 2020. But the baseline period should not be after the first quarter of 2020. We strongly recommend that you choose a baseline period that includes all of your concessions. In the next two questions of rent relief previously provided and rent relief applied as credit, we are looking to verify whether the airport is reimbursing itself for waived rent and or if the airport is issuing rent credits to the concessionaire's accounts. The answers should be yes or no with a short explanation. Finally, in the Notes on Special Circumstances section, you will want to include circumstances that in general apply to all of your concessions. We are requesting that you use this section to state whether or not the airport is required anything from the concessions in exchange of the rent relief under this grant. For example, sponsors may require certifications that each eligible concession continues operating or that it remains ready, able, and available to operate at the airport. Sponsors may include phased reopening schedules and expect cooperation with regard to varying levels of service periods during the changing demand. That type of information should be clearly stated in this section. Now we will focus on the information within the section in the slide that is highlighted in the red box. For the ARPA plan, you will need to split the concessions into two categories: eligible small airport concessions and eligible large airport concessions. As discussed earlier, large airport concessions is a concession that has gross receipts averaged over the previous 3 fiscal years of more than $56,420,000. A concession that operates locations at several airports should use the entity's total gross receipts across all of its locations. In general, a simple way to determine the entity is by the tax identification number. An eligible small airport concessions is a concession either with gross receipts average over the previous 3 fiscal years of less than $56,420,000 or a joint venture with one or more Acdbe partners. Notice that for joint ventures with an Acdbe, the gross receipt is not a qualifying factor. Airport sponsors are not required to scrutinize financial statements or conduct an extensive review of the firm's activities. In general, the sponsor may inform the concession of the two classifications and request that they identify which category they would place themselves under. Note that some verification may be required if, based on your knowledge of the concession structure and activities, you think that it should be classified a certain way. In this section, you should identify the concession's legal names and concession's trade name or the DBA name. You want to make sure that the legal name you are entering here matches the legal name with whom you entered into a contract with, typically identified as a contract by and between the firm's name and the sponsor. It is very important that you disclose the full legal name, as we are using this information to cross-check with PPP loan information. Make sure that you list all of your in-terminal concessions, whether they are deemed eligible or not. If for some reason any of the concessions are not eligible, you would zero the amount and state the reason they were deemed ineligible in the comments section for that row entry. The next column is for information about contractual relationship between the airport sponsor and the entity that you are listing. In most cases, it will be a direct contract, which means that the contract is by and between the airport sponsor and the entity. In cases where the first tier entity does not meet the definition of a concession because it does not operate a concession at the airport, only the subcontracted or the subleasing concessionaires, which often report as a second tier, are eligible for rent relief. In that case, the contractual relationship would be identified as a subcontract. You will need to identify the contractual relationship for each concession that you are listing. An airport sponsor should categorize airport concessions based on the contractual relationship in place as of March 11, 2001, which is the date of enactment of ARPA. Although there is no prohibition against modifying the contractual relationships between an airport and its concession, changes made after enactment should not be for the purpose of recategorizing a concession as either a large or a small airport concession. For example, an assignment of a sub-concession contract with a prime or developer to be a direct concession contract with an airport sponsor. We are now moving on to the next part in the sample plan that deals with the calculations of rent relief. This section requires that you disclose the rent income in the baseline period that you identified. ARPA requires rent relief provided to be proportional among each group of eligible concessions. The second column will show the proportion percentage based on the rent income. And lastly, the rent relief provided column shows the proportion shared dollar amount allocated for each concession. As noted in the concession rent relief plan explanatory notes, rent relief provided must be for occupancy after March 11, 2021. An airport sponsor must account for proportionality on 100% of each grant allocation to administer the relief to eligible small airport concessions and eligible large airport concessions, respectively. There may be cases where an airport sponsor is not able to allocate the full grant amount. In that case, contact our office for additional clarification on how to disclose that information. Next, we are going to discuss the information related to rent relief adjustments, Acdbe classification, and PPP second draw information. In the first column, you would note any adjustment made to rent relief amount. We understand that there may be limited circumstances where the allocation can result in a small number of eligible concessions in one or both groups, the small or the large category, that consequently some concessions could receive large allocation as compared to other eligible concessions or contractual rent obligations. In this case, an airport sponsor may provide relief for only the anticipated rent due from March 11, 2021 through either the expiration of the concession's current agreement, not including any options, amendments, or holdovers to extend the term of the agreement, or the 4-year period of performance of the grant, whichever is earlier. A sponsor may not provide relief in excess of concession's financial obligation and must complete the performance within the terms of the grant agreement. The sponsor may estimate this amount of future rent based on contractual terms and historical activity. The sponsor must then allocate proportionally any remaining funds first to the other eligible concessions in the same group, and then to eligible concessions in the other group. In these circumstances, the sponsor should provide sufficient detail in its airport concessions rent relief plan. The next column, you should identify if a concession is owned by an Acdbe at 100% or through the partnership in a joint venture. In the case of a joint venture with an Acdbe, we request that the airport sponsor identifies the percentage of ownership by the Acdbe partner. That information can be entered in this column or in the comment section for that specific concession. So the next two columns deal with PPP loan draw information. It is important that if the concession discloses whether or not the concession received a second draw or assistance for a cover loan under the SBA Act that has been applied towards rent or the MAG at the airport, that it is clearly disclosed. As mentioned earlier, we are cross-checking loan information to identify any mismatches. So it is very important that this section is completed with all of the detail required. Make sure that you enter yes or no for each concession and list the PPP loan information if applicable. Also, if there was a loan, clearly noted the funds were used for rent or MAG at that airport. This brings us to the last section of the sample ARPA plan, which focuses on concession certification, eligibility, and comments. As you know, an airport sponsor should collect concession certification forms where the concession certifies that it has not received a second draw or assistance covered under Section 7 of the SBA Act. A sample airport concession certification form is available on the ARPA website. The sponsor should retain the signed certifications as supporting documentation and report the dates of this certification in this section of the rent relief plan. We want to stress that we do not need copies of the forms. All we need is the date it was signed. Also, there should be a date entry in your plan for each concession to whom you are allocated rent relief in the plan. The next column requests that you verify that the concession is eligible for rent relief. A yes or no response is required for every entry. A no entry means no rent relief should be allocated in that plan to that concession. The last column is for comments or notes on any special circumstances, provisions, etc. If you made an adjustment in the rent relief allocation, either due to the term of the contract or to the 4-year grant period of performance, a note should be made explaining the reasoning or justification in this section of your plan. Also, if you made an adjustment in rent relief allocation, if the concession is no longer an ongoing concern, or if the current operating concession replaced a concession operating during the baseline period, sponsor should make a note and a short comment relevant to the adjustment in this comment section. Any comment on special circumstances specific to that concessions in that row should be identified in this section of your plan. So this concludes the overview of the ARPA Concessions Rent Relief Plan. We will now move on and discuss some of the lessons learned based on technical assistance sessions that we have held and plans that we have reviewed. So some of the lessons learned, as you can see on the top of our list, is the missing legal name. We have received many plans where the concession's legal name is excluded. We get entries that include the concession's contract name, the location at the airport. And as we mentioned earlier, it is important to include the concession's legal name since we need to cross-check with PPP loan information. You want to make sure that the legal name you are entering here matches the legal name with whom you entered into a contract with, typically identified as contract by and between the sponsor and the concessionaire's legal name. We are also getting a number of plans that do not appear to include all of the airport concessions. In your plan, make sure that you verify eligibility for all concessions. For CRRSA, eligible concessions include on-airport car rental, on-airport parking, and in-terminal concessions. In-terminal advertising, restaurants, retail stores and kiosks, vending machines, ATMs, personal services like shoe shine spots, etc. In the case of ARPA, eligible concessions include in-terminal airport concessions, physically located in the airport terminal building, such as in-terminal advertising, restaurants, retail stores, kiosks, vending machines, ATM, banking, any personal services like shoe shine. So for on-airport car rental and on-airport parking related to ARPA, you may include the rent for the in-terminal presence only, which is typically rent for counter space or office space. This amount is typically calculated as square footage, not as a percentage of gross receipts. If a concession is deemed ineligible, please note the reason why in the comment section of your plan and remember to adjust the proportional shares accordingly. It is very important that you include the PPP loan information and the date the concession certifications were signed. Again, we cannot approve your plan without this information. Consultation requirements are different for CRRSA and ARPA. For CRRSA and ARPA, you are required to consult with your concessions community and discuss the grant and how proportional share will be calculated. Your plan should include the information on when the consultation took place with all eligible concessions. For CRRSA, you are required to hold a one-on-one consultation with ACDBEs. This includes ACDBE partners and joint ventures, regardless of the percentage ownership. We are also identifying some prime concessionaires that are being incorrectly identified as ACDBEs. If you are unsure whether or not the concession should be classified as an ACDBE, we strongly recommend that you coordinate with your ACDBE program liaison officer, as every primary airport has identified that individual by name in their ACDBE program as a requirement of 49 CFR Part 23. For ARPA, understand that any joint ventures with an ACDBE partner should be classified as a small airport concession, regardless of gross receipt size. We also understand that there is confusion with contractual relationships. So note that in most cases, the contractual relationship will be a direct contract. Only in cases where the first tier entity does not meet the definition of a concession in accordance with 49 CFR Part 23, the second tier entity should be identified. In that case, the contractual relationship would be identified as a subcontractor sublessee. We are seeing plans that incorrectly note that there was a rent adjustment, but there's no explanation on this adjustment. Please make sure that if you make an adjustment, that you also include an explanation in the comments for that specific concession. Finally, Know that your concessions plan is the only official record copy that we retain. When we review your plan and post questions or request additional information, make sure that you update the information directly on your plan. The plan should include all of the information necessary that would be required for us to issue approval. And now I will turn the presentation over to Elizabeth to guide us through the questions and answer part of the webinar.
Okay, thank you everyone for your attention. We have spoke now for 45 minutes, giving you a really good detailed overview of what we expect on your relief plans. But now we're gonna take some question and answers for the rest of this webinar. And some of you have submitted questions prior to the webinar, so let me go ahead and read those now. We will try to answer as many questions as possible in the time allotted. We'll also try to get to the questions you have been submitting in the Q&A box. I've been seeing quite a few come in. So with our last 45 minutes, we will try to answer as many questions as we can. So let me start with the ones that came in prior to the webinar. And Dolores, I think this is a good question for you. How does the FAA determine a small versus large business for the concession relief? Is it per airport? Is it nationally overall? And does it matter where the business is incorporated?
Thank you, Elizabeth. So as mentioned earlier in the presentation, the easiest way to identify it is the entity is by tax identification number. It's difficult for us to give a blanket answer and say if they operate at different locations, you should consider all of the locations. It's based on how it is structured. We understand that some entities, some concessionaires register a new company in the place where they operate. So technically that would be a new entity. Some concessionaires choose to use the same entity to operate at the different locations. So that would be the entity. Again, the best way to verify this is to pose that question to your concessionaire and understand how they're structured.
Dolores, here's another one for you. Could you please confirm that airports may voluntarily provide ARPA relief to other on-airport concessionaires, for example, the on-airport rental car concessionaires, regardless of the concessionaire's eligibility to receive dedicated ARPA relief as an in-terminal concession?
So we understand that airports have already provided some rent relief, and that's fine. Airports are allowed to do that. Under the ARPA and the CRRSA rent relief programs, it needs to follow specific requirements that we explained. It will become very difficult if you want to try and match what you have already issued and match it to what the ARPA and CRRSA requirements allow for. The best way to do it is to do your calculations under the ARPA and the CRRSA, and then see where you fall under. If you issue rent relief and you can reimburse yourself for that, it would only be for the amount that is allocated for that specific concession. So yes, you can issue rent relief, but it would be under your terms and not specifically under the CRRSA or ARPA terms.
Dolores, I have another one for you. This is actually a two-part question, so it's a little long. If you need me to repeat it, feel free to ask. So the first part, my airport has what I think is a somewhat unique situation, and we're understanding many airports have unique situations. All of our rental car companies are currently in contract holdover. So in order to be able to use the ARPA concession funds for their rent, could we have them sign an additional document that says they agree to be willing and able to operate and continue the obligations of their original contract during the ARPA concessions grant period? Let's start with there. So I'll add to the second part after that.
So as we mentioned in the ARPA FAQs, we talk about holdovers and we talk about not issuing rent relief that exceeds the base term of that contract. But we understand that nationwide, there are some concessions that are in holdover, sometimes month to month, until the airport determines what they can do and what they're able to do as we come back to a normal concessions environment. In that case, the airport should look at its master concessions plan and make a determination as to how long will you hold these concessions on holdover. If you plan to hold them on, have them on holdover for a few months, then that would be the rent relief that you would allocate for that specific concessionaire. Regarding the requirements, there are sections in the FAQs, both under CRRSA and ARPA, that talk about what some of those requirements can be, and it does talk about continuing performance for that concessionaire. So that's, in general, that's something that you would look at and also determine what is your master plan to be able to determine the percentage of rent that, how long you would be able to allocate that rent relief.
Okay, so I have the second part of the question. Can we make a single claim drawdown to draw down all of our ARPA concession relief funds we anticipate using as defined in our plan, and then just apply it to the rent on a monthly basis instead of making a separate claim drawdown every single month? So absolutely, you can submit one drawdown request with your plan. Makes it easier on us, as a matter of fact, to do it that way. So when you have the plan and it's final, yeah, feel free to send it in through Delphi and ask for the entire amount of the concessions relief for reimbursement. And if the plan looks great, we'll reimburse you for the whole amount.
I think the only thing that I would add is that you make sure that you make the distributions right away, that whatever amount you are submitting the request for, that you're able to distribute to those concessionaires right away.
And of course, those can be in the form of rent credits.
Okay, the next question, I think I can answer this one. The question is, we have a single restaurant in our terminal. Can concession relief be used for COVID fighting expenses like carpet and duct cleaning, kitchen and hood sanitizing, etc.? So the short answer is no. Each airport was allocated specific funds to be used for operational expenses, such as the cleaning type expenses listed in this question. And specific funds were allocated to be used specifically to rent relief to concessions. So there's two different pieces to your CRRSA grants. These two funds cannot be commingled. So for operational expenses, you use your general CRRSA funds. And for any concession rent relief, that's for your concession grant, your concession funds. And also be sure when you submit these expenses into Delphi for reimbursement that you're not commingling them as well. For example, when you have operational expenses to submit those in Delphi separately from when you submit your concession relief payment request.
You know, I think I will break into this, Elizabeth. I think it's important to consider that, yes, these two grant programs came under the same legislation, but the concessions rent relief reimbursement program is to reimburse sponsors for foregoing and forgiving rent that was due and owing forever. So it's dollars you are not collecting that you could have collected. That's different in kind and character from reimbursing you for eligible operational expenses. So don't mix them for reasons that I think benefit all that are listening. So a lost revenue or revenue that you forgive, rent that you forgive, is not a cost in a sense. It's not an operational cost. This is forgiveness, I should say. It is rent that was due and owing that you're not collecting. To the extent to which you can show proportionality based on a baseline time period rent, you can get reimbursed from that. It is separate. All right, thank you.
Yeah, good point, Dave. Emma, let me throw a question over to you. Do we need to have new concession certificates completed, or can we use the ones from the Carissa submission? So this is for ARPA. Can they use the form that they collected for Krissa for ARPA?
Thanks, Elizabeth. So short answer is no, I should say no, they cannot use the previous forms. They should collect new ARPA concession forms and retain them as supporting documentation. And like we talked about in the presentation, we need to make sure that we have those dates for those new forms that you've collected. And this just ensures that the airport sponsor has the most recent information regarding their concession certification. Something may have changed since they completed their CRRSA plan. So yes, please go ahead and complete new forms and provide those new dates when you submit your ARPA submission.
Dolores, sponsor is asking, we are getting ready to submit our CRRSA concessions drawdown in Delphi, and we want to make sure we are entering the correct period of performance. Since the CRRSA concessions relief calculated for some of our tenants was for the first quarter of 2021, while some of our tenants will have the relief credited in 2022, it is not one date for all tenants.
So Elizabeth, I think we discussed that in Delphi, it doesn't require a period of performance for the concessions plan, correct?
Correct.
So don't worry about a period of performance when you provide the entry in Delphi.
Well, other than it can't exceed the 4 years. If the rent credit consumes all rent that could possibly be due in 4 years, more than 4 years, then you're going to run up against the fact that that's beyond the period of performance. But the baseline time period is about how you set your proportionality for rent paid. It doesn't relate to, other than rhetorically, we talk about it's probably a good idea to pick your baseline time period in a congruent manner. The baseline time period for rent paid does not relate to the period of time in which the rent credit could be absorbed by your tenant. I mean, the rent credit could be crediting for a balance due, for example. So it could be consumed immediately, as long as that period for Krissa is after December 27th, and for ARPA, it's after March 11th. I'm never going to remember that. There's so many things that happen in March in COVID world. I understand why you're conflating the period of time of baseline time period and the period of time of consuming the rent, but those actually shouldn't be the actual same time in the time space continuum. They're just calendar related to each other, not related as in the same time.
Back to you, Emma. In calculating relief for advertising or vending, is that relief based on the percentage paid to the airport in the contract?
Perfect. Thanks for that question. So it really depends on the structure of the contract between the concession and the airport sponsor. And the FAA acknowledges that there are a variety of contractual agreements between airports and airport concessions. It's going to be unique to the airport. And so for that reason, we lean on the FAA definition of rent being broadly, including any payment to the airport in exchange for operating a concession business at that airport. So in considering of the unique circumstances, the airport sponsor may want to narrow that definition to your particular situation there at your airport, but just ensure that you apply that narrow definition to all concessions at your airport, and then also identify that unique circumstance in the relief plan and consult with all your concession stakeholders on that narrow definition so that everybody is aware of how you are defining rent there at your airport.
Elizabeth, if I may add to that, just think about it in terms of what they pay to you. And that's the number that you're identified in your baseline period. There should be some consistency across the board. So if just think about it in general, baseline period, what did I collect from them during that period that I have identified?
Okay, so we just went through all the questions that were submitted in advance of the webinar. So we have gotten a ton through the Q&A box. I don't know if I'll be able to get through all of them. And please note that if the question is something very specific to your airport unique situation with a specific concessionaire, please, if it's skipped over, please do send that question to our CARES airports at faa.gov email address, because we will definitely respond to you. So if you don't get an answer here today, please know that we will answer it promptly when we receive it in the CARES email address. And also in some situations, we may have to give you an IOU because we don't have an immediate answer. So I'm just going to go ahead and start reading some of these off. Okay, this one I can probably answer. What are the differences, main differences between the CRRSA and ARPA concession relief programs? So hopefully we've answered that as we've gone through the webinar so far, kind of pointing out the differences. I think the main differences are probably eligibility date, December 27, 2020 for Carissa, and going forward from March 11, 2021 for ARPA. Who the eligible concessions are, as we pointed out, the concessions for Carissa are a bigger pot, a bigger audience, and then much narrowed to in-terminal concessions only for ARPA. And of course, for ARPA, we have different funding categories, small versus large. So that's a little extra difference between the ARPA program. So,
and you don't have to worry about that measly 2% in Krissa and ARPA. Measly, I'm sorry, I shouldn't say that, but you don't have to figure that in. In fact, you can't figure it in, right?
Right. Popular question is, will this recording be available? Yes, our Krissa and our ARPA websites, this will be available, recorded. So you can watch it again to go over certain sections of the plan that you may have doubts about. So I would say within the next week, we should have that available on our websites. Dolores, regarding ACDBE consultation, does the sponsor need to meet one-on-one with DBE vendors or subcontractors of the concessionaire that contribute to the concessionaire's ACDBE goal attainment? Do we know that?
Yeah, so one of the comments, I guess, misconception is mixing the two requirements. One is ACDB program 49 CFR Part 23 requirement and participation in goal setting. All of that is separate. For the purpose of the CRRSA, which requires that one-on-one meeting with ACDBE concessionaires, we're looking at the first tier. Unless, as mentioned earlier, the first tier does not meet the definition of a concession, then you would meet with the second tier, which would be the subcontractors. Typically, what we see that would be in scenarios where we have a developer, that would be the first tier. Developers typically do not operate concessions at that airport. They mainly administer the concessions. So then we would require you to look at the second tier. In that second tier, if there's ACDBE concessions, either ACDBE through 100% ownership or ACDBE joint ventures, then we're going to look for you to have that one-on-one consultation. So in your mind, try to keep the requirements separate of the ACDB program goal attainment participation and focus on the contractual relationship and who you are in contract with.
Great. I'm going to take these next two questions together. They came in separately, but they kind of refer to the same thing. Can you confirm that car rental agencies are not eligible for ARPA? And second question, we have car rental counters inside our terminal where sales take place for the car rental companies. Could you confirm if this would make the car rental companies eligible in our case? So important to remember is for ARPA, it's the physical and terminal presence. So if you have a counter, your car rental agency has a counter, that square footage space, that piece of the rent that's attributable to that car rental counter, that is the square footage that you would calculate as a percentage of the rent. Then those car rental agencies are eligible for ARPA relief. So it's very narrow. Car rental agencies basically only to their in-terminal physical presence.
Elizabeth, I may just want to add because it looks like there's a confusion because of the way 49 CFR Part 23 defines a concession. And it says if there's a physical presence, then it qualifies. This is different. This is different for ARPA. Even though they may be considered on-airport concessions, they're not in-terminal concessions. And it is only the in-terminal physical presence, which would be the counter space or the office space. And it is not a percentage of the gross receipts. You would need to calculate the square footage and the fee paid for that physical presence only.
Next question, if all of your concessions are large, can you allocate the small portion to the large? Or do you just close the grant with an underrun of the funding? So this is something that we outline fairly easily, clearly in our FAQ. So if you only have one category of concessions for ARPA, if you only have large and no small, you can take the large pot and the small pot and proportionally provide some of the relief to the one category you have. So you do not have to take an underrun of the funding. You can allocate the whole amount over the one category of concessions that you have. Just make sure it's proportional.
And I want to note that if you read the initial version of FAQs, you probably would not have gotten that information because I do believe we changed that guidance or refined it, I should say, as a result of learning about the circumstances. So please take a look at the FAQs. I do believe Elizabeth is right. It's explained very clearly in the most recent version of the FAQs.
So we do want to encourage you to take all of the funding and not turn any back because you can use it for one category. Great. Dolores, here's one for you. If the concession is occupied after March 11, 2021, but the rent is not in the baseline as that space was not open in the baseline, can this concession receive rent relief?
So for that, we will look at whether or not, you said that it was not in the baseline, but did it replace a concession? So look at your master's plan and see if within the baseline period, there was a concession in place and this new concession that is now open actually replaced the concession. Then you could use the baseline period rent information for the concession that was previously in place.
And Dolores, again, on both concession plan certifications, are the tenants ineligible if they have drawn down from the second PPP small business loan if they are not an ACDBE or joint venture?
I'm a little confused with this question, Elizabeth. I'm going to try to answer it. In my understanding, it appears so there's a joint venture that has multiple partners. For PPP loan information purposes, we look at that entity. Did the joint venture request a PPP loan? Did they benefit from that second draw? That's at the level that we would look at. It appears that they're looking at second draws for other partners, but I'm not quite sure if anyone is reading it differently. Dave, I think you're on mute.
If I recall, the Krissa PPP second draw for rent requirement was to make sure that we weren't reimbursing for a rent cost covered by a second draw of PPP. I think it was the reason was because rent was covered under a second draw, which it may not have been covered under a first draw. So I think that may be a red herring, but of course you don't want to get reimbursed for the same thing twice. Nobody should be doing that. So that is why it's important in ARPA to ensure that you don't forgive rent for something that they've already been paid for. It really protects your concessionaires as well as yourself, because that can be very problematic. So it's if they use it for rent, that's why we're checking it with ARPA. That's why we were required to check it for CRRSA. But the concept remains the same and very important that we do not want to reimburse for the same. In the case of the tenant, it's a cost. In the case of the airport, it's lost revenue. So, but it's still, you want to stay away from reimbursing for the same event twice. That's why we need to take care of it for rent.
And if by chance we misunderstood any of these questions and we're answering differently than you expect, again, please send us the question via email. We're happy to sort it out. Just going to open this up to anyone on the panel. If our agreement is with a master concessionaire who is a large concessionaire, but that master concessionaire then entered into a joint venture agreement to meet its ACDBE goals, are we to consider the master concessionaire a small concessionaire, even though our agreement isn't with the JV?
I'll take that one, Elizabeth. So as mentioned during our presentation, we look at the first tier first, see whether or not they meet the definition of a concession. So in a master concessionaire structure, the way that I understand it is they may sometimes operate locations. So they say it's a master concessionaire who operates some of the location and then subleases other locations, including to a joint venture. Then the classification would be under the master concessionaire because they technically meet the definition of a concession. You don't look at the second tier and you would classify them as a large airport concession. If it is the case where that first tier does not operate any concessions and subleases the entire operations, all of it, everything, to the second tier, which happens to be a joint venture with an ACDBE, then that would be classified as a small airport concession.
And maybe, Dolores, this one, if a concession chooses not to reopen due to low traffic, can they be excluded from the eligible concessions listing?
I think, Dave, do you want to take this one?
I'm going to need that one more time, please.
Yeah, if the concession chooses not to reopen due to low traffic, can they be excluded from the eligible concessions list?
I think it matters a little bit on the timing of it. If you give us an idea, I mean, there's, and I don't think we brought up that new tenants or new elections to be into the airport after a certain date, we may not consider to be, we would think that the rent relief, the rent would have been adjusted. So that would be somewhat, you should be careful about that. And I can't remember the date, but about applying a prior tenant's rent to the new tenant's benefit, because the new tenant is likely paying much lower rent. So keep that in mind. You shouldn't reimburse for tenancy that is not used. So it's just not, it's like you can't go back before the certain dates of December 27th for CRRSA and March 11th for ARPA. You can't go before that. You also don't want to go to a time period where you're actually providing credits for occupancy that is not happening. So that is what you want to look at. I believe that's the question, and the answer would be don't reimburse for a party that is gone for their occupancy beyond that time period. If it's rent that you could have demanded that you're forgiving, then come talk to us about it. But you shouldn't be, what we really don't want to see is rent relief credits or reimbursements for entities that are zombies that never were operating. That's really the nightmare. That's why we're concerned about it. But if they were operating in a time of COVID and they struggled and they were paying rent and they owed you rent and they didn't pay the rent and you've forgiven the rent, then I think we'd be interested in that credit.
No, that's pretty much it. We're looking as whether or not they're ongoing concerns. Are they ready, willing, and able to operate when you call on them? So there may be specific circumstances and if you have a specific concern, then you can reach out to us and we can go over, at that point, we will go over the specific issue and probably your overall concession master's program to
Right. And,
understand it.
I think if you're in a position where you're wanting to write a check to somebody who has departed the airport, let us know. Yeah, let us know, because that's the sort of thing where a red flag should go up. If you're thinking about writing a check to a party that you have a forwarding address on, that's the sort of situation we don't want to be in. But we'll take a look at those circumstances.
Elizabeth, I'm going to go ahead and take the next two questions that are dealing with holdovers, with expirations. They both address the concern. And in the question, the FAQ, we specifically listed rent relief not to be extended past the base term of that contract. It talks about holdovers, it talks about extensions. Now, understand the reasoning behind we did that. In that sense, we did not consider that you would have all of your contracts on holdover during this time, or that you would amend a specific contract, all of your contracts, I have heard in some cases, for 2 years to carry you over the situation that we find ourselves under. When you look at your rent relief allocation, look at your master's plan. For those contracts that are on holdover, how long do you plan to have them on holdover? Do you need to have them for a period of 6 months, for a year? Then you can allocate rent for that period of time. So again, the question what we were trying to answer in CR 27 was in general, and to limit the rent relief to be allocated for an extended period of time and have some concessions benefit more than the others. But we definitely did not intend to exclude those small businesses that are on holdover for a specific reason. Reach out to us if you want to have a one-on-one consultation and have us provide more guidance on your overall concessions program.
Okay, this is for anyone on the panel. We have some concessions who are on a month-to-month basis with their lease terms. Would they still be considered eligible concessions?
I think that's the answer that we provided in general earlier.
Covered that one?
Mhm.
Covered that one, okay.
Right. Yes. And I think if there's some reason why don't give us some evidence that this is a tenant in good standing that is anticipated to continue offering services. That's really the concern. This is just the way it's been, then I'd be interested in hearing it. In the case of Krissa, it's very likely that the tenant that has been operating has literally been in place during a time period in which they could absorb all of the rent credits that would be forthcoming from Krissa. I would imagine that because Krissa was so small, but that ARPA, I would also think that you could do so for tenancy after March 11th. But take a look at how it pans out. If they're doing business at your airport in 2021, that's certainly a time period that is impacted by COVID. And if they were in place and you've forgiven rent and you can show proportionality, I think that's likely to be happening.
I think we have time for a few more questions here. Are display advertisers, for example, the ones that rent wall space or pay a fixed monthly fee to advertise, are they considered a concessionaire for Krissa or for ARPA?
I'm understanding that to be in general airport advertisement, to be in terminal airport advertisement, and that is included as in terminal concession.
But it is, the rent would be the money they're paying for the advertising, right? Not the product they're advertising. It's just, I mean, I'm sure that's clear, but a sign for advertising is the rent calculation. The rent from the baseline time period should be the amount of money they pay for the displaying their rent, their advertising.
Yeah, is there baseline rent that the airport is collecting in general?
Are we allowed to reimburse ourselves for future ARPA rent relief that is eligible under the ARPA program?
Yeah, you could. Okay, how do I put this? If you give a rent credit, it won't matter. The rent credit has to be consumed by the rent owed after the date, December 27th and March 11th, and within 4 years or the term of the lease agreement, putting aside the holdover thing that Dolores has been talking about. So I think temporarily it won't really matter. if you provide the rent credit. In some cases, that rent credit may be reimbursing you for rent you've already forgiven from the December 27th to March 11th. In some cases, it will be a credit that represents rent relief for that time period, but that has not been taken yet because they've been paying their rent. So that would simply be used at the discretion of the tenant. I suppose there's no reason why a tenant wouldn't use the rent credit for the first 2 months or a month or half a month of rent due and owing to you. That would make sense to me. So I don't know that I'm maybe missing the temporal aspect of the question. It shouldn't go on beyond 4-year period of performance, as we've said before, or the reasonable term of the expected tenancy. You can't relieve rent that's not due and owing, because you can't forgive rent that's not due and owing.
I think one of the probably key confusions was reimburse ourselves for future. It said future rent, I
Yeah.
think. So when we look at reimbursement, we look at past waived rent. When we look going forward, we're looking at you to post a credit to the concessions account. So technically it's not a reimbursement.
You know, what I would also recommend, and I'll springboard off of this, because I want to make sure that you provide a resolution to all your tenants on this so that they understand what portions of rent relief, if it's a credit, if you give them a credit, then that will be obvious. Here's exactly what came out of their spreadsheet calculations. This is what the FAA has approved. Here's your credit. Oh, by the way, you owe us money for the past, so that you can apply the credit to what you owe us, or we've forgiven the rent to you since the time periods. So that applies to that. And you still got 2 cents left over. So take 2 cents off your next month's rent. I would imagine it would work out that way frequently. And then frequently it would work out that in fact, the rent reimbursement that you're providing is that you're getting reimbursement from us on is going to be consumed quickly. It's not a lot that for occupancy over those time periods. If they paid the rent, then they get a rent credit because they still have some credit left. If they didn't pay the rent, then it's going to be consumed by what they owe you because you're forgiving it. But make sure the tenant understands that. Of course, if the tenant doesn't understand it, they're going to be asking you about it, I suspect.
All right, thanks. I think I can answer this one. If in-terminal food and beverage concessions have only a percentage of sales, in addition to a common area maintenance fee as their rent fee, would they be considered an eligible concession? Yes, they would. This goes back to how we loosely define the term rent. So what you would do is look at what they provided to you as income in exchange for services or goods during your baseline period. So if they were paying a percentage of sales and any other fees associated with that, that would include, in quotes, rent. So yes, they would be eligible. They did provide you with income during the baseline time period, and that would make them eligible. Any of the panelists have anything more to add that I may have forgotten to include for this? Common area maintenance fee, that's something we would include, right?
If it's rent, look at your contract and look at the rent structure there. I think the main thing that we have been excluding is sometimes it's passover fees like taxes that you might have included in the rent structure, but technically in general, what are they paying you to operate at that airport?
Right. So it had to be a component of their operation of the airport.
Mhm.
I mean, I'm imagining a food court, everybody, I don't know about you, but where part of their business means that there's some tables out there that they're not exclusively part of their rent. It's not their leasehold, but they're paying for some rights to that otherwise they could, I think that may be considered rent, but take a look at it. And if you have a particular approach and you're applying it evenly, let us know. So in some cases, it may not make a difference.
Yeah, and that's one of the main reasons why we define rent loosely, because it would have been very difficult to take into consideration every single structure out there. It depends on when they're located. It depends if it's a food court. There's so many factors that we would have needed to consider to provide an answer for every possible situation.
All right, okay, I think we have time for one more question. And again, please do, if we didn't get to your question, please do send it to our email address. I'm going to take a stab at this one, and please, panelists, let me know if I am far from the answer, accurately answering it. What if the amount of rent relief exceeds the PPP amount used for rent? Can we deduct what they already received from PPP and reimburse the additional allocation? My understanding, correct me, Dave, Dolores, if I'm wrong, But if they take any sort of PPP amount and they use it for rent at your specific airport location, that disqualifies them. It doesn't matter the amount. Am I correct
It
on that?
certainly disqualifies them for Krissa, certainly disqualifies them from my remembrance of Krissa.
Mhm.
I might take under advisement about ARPA.
I think for Krissa, there was a larger impact because that's when their second
Mhm.
draws were being released. We haven't seen hardly any on ARPA that are noted where they received the second draw and used it for rent, but for specific situation, let us know and we can review that with you. Elizabeth, just a quick recap of some of the questions that keep coming up on airport car rental, whether or not they qualify for ARPA. Again, it's in terminal concessions for ARPA. So for car rental, you would only consider the physical presence in the terminal, which is typically just the counter space.
Yeah, I think the key is we don't want to see all revenue using the baseline time period that you collect from a rental car facility because they have a counter space in the terminal. It needs to be proportional to the impact of the in-terminal presence, as Dolores just said. Otherwise, that could be confounding and certainly defeat the intent of ARPA.
It looks like we are almost out of time, and they understand this webinar will automatically stop if we hit the 3:30 time. So thank you all for your really great questions. They've been great. We've enjoyed doing this webinar. Our final slide here provides the links to our sample forms, frequently asked questions for both Krissa and ARPA, and the other program resources that we mentioned throughout this webinar. And as I mentioned, this version, a recorded version of this presentation will be available on these same websites at these links in a few days to a week. And just a reminder that when you finalize your plan, Krissa or ARPA plan, and you're ready to submit your payment request in Delphi for a reimbursement, there are 3 documents we need for that reimbursement request. We need your final plan. We need your standard form SF 425 signed and a signed closeout report. We do not need any other documentation. We don't need the airport certifications. We're just going to need the dates for those on the plan. So you do not need to send all that information to us. And finally, there's our email address that you can, right there at the bottom, that you can contact, reach out to us. Again, if we didn't get to your question today, please do send us the questions and we will respond to you promptly. Now let me turn it over to Julianne. She is going to close the webinar for us.
Well, first, I'd like to thank our panelists for a great presentation and Q&A today. Awesome job. More importantly, I would like to thank all of our folks that have joined in attending the webinar. I do hope you found this webinar helpful and it answered any questions you might have. Again, the webinar has been recorded. We will be uploading the recording version to, and I'm not sure if it's going to be both to the Krissa website or to the Krissa and ARPA website, but we will do our best to make sure that it's at least uploaded to one of them. I wish you all a great evening. Thanks.
Thanks, everybody. Thank you very much, panel. Fantastic job.